All right, good afternoon, guys. My name is Madhura, and you are at Money Matters right now. So, yes, if you're someone new, welcome to the show. And if for many of the returning viewers, welcome back, guys. It is so nice to have you all back. It means a lot that many of you do follow this show, and every episode you do take away something new. It may be with regards to personal finance. Some of the times it's about businesses, entrepreneurship, and all of that. And I hope it continues to add value to you in your career, in your business, and in your life. So, if you're someone new to Money Matters is a show that is conducted on Sunday afternoons in Malaysia, or if you're from other parts of the world, it may be a different timing, but it's Sunday, 3 p.m. GMT plus 8. And this is a show where we discuss on these finance topics. Money matters, basically anything and everything related to money. And we have had amazing speakers who come on board. Yes, we do have some episodes where we talk a little bit more technical things. Today may be a bit more of something very informational for you, but we also have some episodes where it's a lot more on individuals' experiences, where these people actually come on board to share their personal life experiences with money, what were the lessons they learned, and how they addressed their mistakes and came out of it. So we hope to provide you variety so that you're constantly getting something new, and we hope you follow our show moving forward so that you can continue. You have a place to go to continuously level up with regards to money matters. Because I think it is a very wide topic. There's so many things to be learned, and one book or one hour of watching a video or YouTube is not going to change our lives. But if we can set aside some time every week to just update ourselves on something new, for sure we will be making progress. So that is why I run this show, and I hope it is serving this purpose for all of you. And yeah, so today we have a very exciting episode, and there are many other exciting episodes coming up as well. In fact, I have a very nice lineup coming up in the next 1-2 months. We are going to have some teenage entrepreneurs who are going to share their experiences. We're going to have some experts to talk about credit rating, a lot of important topics to discuss on personal finance. So do not miss any of these episodes. Do subscribe to Money Matters if you have not done so already. Do not worry, there's no charges for it. All you have to do is click on the the link that I've sent in the chat box, subscribe to Money Matters, and you'll receive an update from me on the topics that we have for this week, that particular week. And you just have to tune in, learn from us, join us, have fun with us, and meet us again in the following week. All right. So without further ado, let's get into today's topic. And I think many of you here were very intrigued by it, and you are looking forward to learn something about it. Some of the youngsters I spoke to about this topic told me that they have no idea what it means. So if you are not familiar with today's topic is about budget 2022, what you need to know. So for all the youngsters out there, if you don't know what is budget 2022, it's not a specific thing in a way, but what we are going to be discussing about is the national budget for Malaysia for the year of 2022. Just like how individually we have budgets for ourselves, the country also has to have a budget, and that is what we're going to be talking about. Many of you may have seen your parents sit in, like I remember this very distinctly when I was younger. My mom and dad will actually turn on the TV and they take the evening off and they'll watch this whole show, which was so boring for me when I was watching it. And I was like, I don't understand anything that is going on, but they were so focused on it. And that was my experience of seeing my parents watch Budget 2022. And I'm sure many of you would have experienced this, and you may not know what is it about. And what we aim to do in today's episode is to break it down in a very easy and understandable manner for you. And we will be highlighting some key points about income tax and corporate tax and all of that that was introduced in our recent Budget 2022. So for all of you entrepreneurs out there, this is a very valuable session, because there's a lot of inputs that you definitely need to take note of. It will have some impacts on the way you do business and all of that. So pay close attention to the next session. And the speaker who has very kindly agreed to come on board to share about the budget 2022 is none other than Mr. Christian from NK Associates. He's a returning speaker on Money Matters. Previously, he also spoke about taxation is a form of investment. It was such a interesting topic that many of you turned up, and I think it is one of the highest viewed Money Matters episodes till now. And I can assure you this will also live up to that video, that episode, because I think a lot of us have many things to learn about the budget. If you're not familiar with Mr. Krishnan, he is a graduate with degree in accounting from University of Malaya, and I think he started off as an audit junior and then he went on to become a manager. But eventually, he himself set up his own practice in Puchong in the year of 2000. I think many of you did not even were not even born in 2000. So he has a vast number of years of experience in not just audit but also tax and corporate advisory. I think many of us, many individuals, many business owners actually go to him for advice, and he is very very good at breaking things down in a way that is understandable by any layman. I think that's what I really, really am impressed about whenever I talk to him. He can really break it down for you in a way that you can understand. Right now, they are under the branding of NK, and I think there are two branch offices in Ipoh and Setiawan as well. And yeah, there's. I think if I introduce Mr. Krishnan, it will go on, but we would definitely love to get into the topic for today. So, without further ado, let me welcome on screen Mr. Krishnan.
Thank
Good
thank
afternoon.
you, Madhura. Yeah, good afternoon to you, and it's good to reconnect again and again about the money, but it's just on the national level. We're talking budgets rather
Yes.
than
Yes.
micro level, but it's more on the national budgets, which has been recently tabled by our finance minister. So
Yep.
today I will more look at the snapshots of it, of the area which may be of interest of most of the people, and try not to have too technical, talk too technical about it,
Yes,
Uh,
yes. I think you will definitely do. I mean, bring it to us in a very very appealing manner. I remember the last time, even though the topic was about tax, we laughed so much, and I was like, why am I laughing so much? So you are a very you actually can make any of these dry topics very very entertaining to learn about. So I'm very excited to have you on the show, Mr. Krishnan.
Thank you, thank you. So thank you, Madhura, and your team. Let me take it from here. Yeah, yeah.
Yes. So
Okay,
I think the
okay.
first thing I personally wanted to ask you was about the before we go into the what was tabled and all of that. Maybe you can just give us a little bit of introduction on like what is a budget, like what is a national budget, and what we should know about.
Okay. Okay, the word budget, it's not alien to everyone, but of course, why we need the budget is a million dollar question rather than what is budget is all about, you know.
Yep.
Uh, so without a budget, we got nothing to compare with, how much we spend, more or less. So having a budget means you are setting up some kind of a yardstick and work around with within that numbers. It can be it's just a simple analogy. If I put it, you want to go for holiday now. It's the holiday season, December, and
Yep.
you want to pack your things and so on, So uh, pack your things, what to put into your bag and whatnot, so that you don't miss the items. So in your planning for the trip, there's a qualitative and quantitative. Qualitative is getting your stuffs and so on. Quantitative on the time budget, where to
Yeah.
go and how much time I spend, in each locations, including living from home and reaching the airports and whatnot. So again, when you talk about how much time, is you are talking about budgeting your time. And we are talking quantitative now already. The next is next element is the money you spend.
Yep.
How much I have is the amount sufficient for me to spend during my holiday.
Yep.
And what happened? What happened if it's not sufficient? My cash dried in my wallet. Do I have a sufficient credit in my credit card or not for me to back home safely?
Yep.
I mean, in the events of any eventuality, of course, you already have a travel ticket or whatnot, but what happened in the events of eventuality? Do I have a sufficient credit to take care that part, that component, the contingency plan? So again,
Yes.
this go back to the budgeting of a time and the money for even a simple trip, holiday,
Yes.
So we scale it up again. We talk about family, budgets by the family, the parents budgeting their expenditure, and so do the corporate world. Now they already do the budgeting for the next year. How much expected sales, and out of their sales, how much they think they can collect.
Mm.
Nowadays, doing a sales is easy. Matter of whether you can collect the sales is
Yes. Whether you
whether you
actually
can,
get the money is the question.
yeah, whether you can convert your invoice into money in your bank is is a tough question to answer. Because the survival of the organization depends on the liquidity they have.
Yep.
Money in the bank matters most, you see, not just having a sales. So they have to
Yes.
prudently budget their expenditure in line with the expected cash collections or facilities available. So on the same note, how the national budget works as well, when the Minister of Finance present his budget, it's more of a spending at the national level
Hmm.
uh, for the country.
Okay.
And the revenue for the budget, of course, this spending substantially comes from our tax collections. And that's the reason why every year they have to revisit the tax, the policies we have, whether we'll be able to sustain our required amount or not, among others. Of course, the
Right.
government do get a revenue from their investments or not, but tax contribute most of it, either through the direct or indirect taxes. And
Yes.
having that, then the government has to plan their budgets, how to and where to use the money, depend on the situations. Like unlike like a few years back, we never have issues like a COVID and whatnot. So all the
Yeah.
money can be spent on the only development and operational purposes. Unlike now,
Yes.
there is one more reason been added.
Yes.
So for the
So
coming year budget, yes, please.
so I think to summarize, it is more of budget. If we are looking at the income part of it for our country, I think as any government, the income is basically mainly derived from taxes for most of the countries. I think some are also reliant on their natural resources, not, but Malaysia does rely heavily on our taxes. And of course, where they channel the funds after they have that collection done and all that, both of these will affect every ordinary citizen's life, I believe.
Yes, welfare of the people, rakyat.
Yes.
Welfare of the rakyat very much depend on the how well this money is spent and whether it reach where it's supposed to reach.
Yes.
Of course, that is a challenge of every government, not only Malaysia, but
Yeah.
also every other country. It's easy for the people to ask, is the money well spent? It's a question of fact, whether it reach where it's supposed to reach. So having said that, for next year, the total in fact, it's the highest amount been allocated, close to 332 billion. Of course, nowadays we are talking
Wow.
about B, no more millions already.
Yes.
So, so of which 70% of that amount, about 233 billion goes to the operating expenditures,
Okay.
whereas about 76B, which is about 23% for the development expenditures, infrastructures and whatnot. And having now we have not, of course, before the 2000 and early 2020, we call pre-COVID. We have not still reached the post-COVID. We are still in the COVID now.
Yes.
So
Ongoing
the
COVID.
government, yes, still we are now like the virus coming out like a new versions of the Android or iOS applications. They're releasing the new
Like
virus
how
like
Samsung releases a new edition every
yes.
month. Now COVID releases a new variant every month.
COVID releases the new variants and so on with a very interesting name as well. So,
So
so the government also allocated another 23 billion, which is about 70% of the budget, to help various community sectors to overcome this pandemic, which we believe may continue in the year 2022. Possibly thereafter, we can start to see the a light end of the tunnel for the end of
yes.
this COVID, possibly.
Yes.
Since people also start wearing masks and following the SOPs. Let's hope for the best.
Yep.
So with that, that's what the national budget in nutshell,
Okay.
all about.
I think the other key point that you also share is like it's we all think like, oh, but it's just like how as an individual we will have our normal operational expenditure, right? Like what we eat and all that, we have all those stuff. But now and then we'll also have to invest into certain things to develop ourselves. So our courses, our like buying a new laptop, all of those things takes place as well. Similarly, countries also go through that. For any of the youngsters here, we're trying to understand what is operational, what is development. That's what basically it means. Just like how we have our upgrading and then our maintenance, our country also has to do the exact same thing as well.
Oh, yeah, if you're holding a old phone now, 3G is not going to work. Now you have to upgrade it. They already send me the message. Please check your phone whether can manage your 3G or not. So similarly, the government also need to spend on the 5G infrastructures, and where the
Yes.
money comes actually from the national budget allocations. If we
Yep.
don't move on to the 5G, again the riot will complain how come the neighboring countries are already into many Gs. You stick with 1G and 2G.
Yes, yes, that is so true. So
So
like in terms of the I think as you mentioned, right, it's taxation that kind of like helps us to get that revenue and all of that. So what are the different kinds of taxation that kind of contributes to our country's revenue in a way?
okay, when you talk about tax legislations, the statute we have, which the law governing the collection of taxes, of course, the mother of all act is the Income Tax Act itself,
Yep.
which we call direct tax. Then other than that, we have also other tax legislation like real property gains tax, where when
Okay.
you dispose of the properties, in our country we don't have capital gains tax like some other countries.
Yep.
Uh, uh, when I talk about capital gain tax, it means generic or common capital gain tax. So we have a very specific capital gain tax, which is a real property gains tax only for the transaction involving the real properties or shares of the real properties company. So any gain arises, it is subject to tax. Anyway, there's a good news during this budget. I will let you all know. And second is a Stamp Act, which mainly for the stamping fees for the instruments like
Okay.
agreements and whatnot.
Yes.
So a memorandum of transfer MOT. So there'll be a stamp duties
Yes.
required to be paid that come under Stamp Act.
Okay.
Apart from that, we also have sales and service tax. Prior to GST, we used to have a sales and service tax. Then GST was
Yes.
introduced, which
Yes.
actually a substitute for the sales and service tax, which we call consumption tax, and that was repealed recently, and SST been reintroduced back again.
Yep.
That again bringing income to the government. That again is indirect tax. Indirect tax in the sense that it's not directly collected from the those people are using it, but it's collected through other agency like businesses who are
Okay.
registered agent for the sales or service tax, and they
Yeah.
collect from the end user consumer and they pay to the government. You know,
Yep.
whereas the income tax is directly collected from the taxpayer themselves.
Yes.
Whereas
So
the
can we? Is there any other taxes that
yeah,
you?
apart from this, we have a customs and excise duties at the
Oh,
importation.
yep.
As you know, any imported items as to pass through the customs. So that all those comes under Customs Act,
Yep.
where they want to either to collect additional revenue or they want to protect the local goods. So the
Mm.
government may time to time amend these goods, qualify for exemptions or to impose additional duties to manage the local businesses as well as collecting the taxes. So these are the main avenue of income to the government through the collection of taxes.
Okay. Okay. So maybe we can go dive deeper into, since you did break it down, right? So maybe we can start off with the, as you mentioned, the income taxes itself. What
Yes.
was changing in budget 2022 in a way?
Okay, for the budget 2022, for the personal tax, let me start with the personal tax.
All right.
The good news of the personal tax is no change in tax rates. It's remain same as good news means there's no incremental tax rates in the personal tax.
Mm.
It's remain as a 2021. So it's the same rate for 2022.
Okay.
And other than that, there are some additional relief being given. There's additional relief or some relief being maintained actually. So to start with, as you say, the youngsters, nowadays, even during the COVID and so on, many couldn't go out and play in the field.
Yeah.
So they ended up pick up online games.
Yes. Yes.
Some become a master of the game.
Yep.
And so recognizing that, you see, the earlier relief available is any prize won, the prize winning money from the by the sports person from the tournaments are exempted from the tax. Basically, the government would want to encourage them to win the game. Let's say
Oh,
somebody
okay.
participated in the Olympics. If given 1 million, for example, for the
Yeah.
medal, they are not taxed on that income. You know,
Okay.
so that exemption is available currently. But now, as I say, the good news for the youngsters in the we call virtual world, now that is also extended to the esports.
Ah, okay. Okay.
Okay, so those who are winning any tournament and any money been won, so it's no more taxable, even for the
Okay.
esports moving forward.
Okay.
Recognizing
I think
the
that that is a big deal because sometimes esports you can win millions ringgit. So that is a very very big impact. All right. All right.
yeah, so that is the new thing been. I mean, rather the relief been extended, to
Yes.
esports as well, rather than a conventional sports game, which we are
Yep.
having it. Apart from that, of course, for the youth, when you talk about youth just now, they like to change phones when the app's not working. So the moment your app's not working, your phone already old enough.
Yes. Yes.
So either you have too many apps, or of course, then you can delete it. By then, if you need to upgrade your phone not working, then you have to so they have government also have extended the relief of 2,500, which you can claim for the purchase of personal computers, tablets, and handphones,
Okay.
to year 2022. Earlier it was
All
up to
right.
2021. Now it's extended further.
Okay.
And other than that, of course, the rest, there's a release involves very much. I think not only the youth, also parents and whatnot. For the serious disease, we used to have a relief of 8,000. Currently, we're having it.
Yeah.
Medical expenditure on serious diseases, which is also inclusive of 1,000 for fertility or vaccination and expenses given. I mean, they can claim 1,000 for fertility or vaccination, as well as additional 1,000 for medical examination. Annual medical examination, so they can claim.
Okay.
So this is actually the government to encourage them to go for a yearly medical examination and claim the cost as a relief.
Okay.
Uh, but with too many people at home stayed together, I think the stress has gone up. So a lot of them has to consult not only all normal doctors but also psychiatrists. To sometimes. But it's nothing wrong. We just get our
Yes.
peace
Yes.
of mind. I think everyone will know that the sleep is the most important in life. The moment you can't sleep at night, then everything will go wrong in the morning. You know so now, recognizing the importance of mental health, the government also allow, recognize that that is one of the important area to take care. And
Okay.
this relief also extended to earlier was serious diseases, but now also the any expenses incurred in the consultation, or getting advice from psychiatrists, qualified psychiatrists,
Okay.
but not your uncle or auntie who talk well. Then they give you a bill, then you say, they are my advice.
Qualified psychiatric.
Yeah,
Got it. Got
yes.
it. So not your relatives. All right.
Yes,
Take-
not even your good friend also.
Yes.
Unless that person is a qualified secretary, well and good.
Yes. Yes. All right.
Uh,
All right.
okay. Then for the relief for the child care, nowadays parents, again, they have to leave, if both of them are working, they have to leave their child at the child care centers,
Yep.
registered centers. So the relief of 3,000 also extended earlier of 2021, now extended to next 2 more years, which is
Okay.
2022 and 2023. You know,
Okay.
uh, so that's good news. They can get some additional relief on their income. So
Yes.
relief is something you minus from the income, not deduct from your taxes, not
Yep.
like a rebate. And for the those acquiring a skill set, those who are taking a degree or diploma programs, in the universities or colleges,
Yep.
they can claim a relief of 7,000. In the past. So now, of course, last year and so on, they also have included 1,000 for the upskilling, like attending
Mm.
seminars and whatnot. Upskilling themselves, not to be a diploma or degree, but also for the courses to upskill themselves. And now this amount been increased to 2,000 now,
Okay.
which form part of the 7,000. By then, now if you spend anything on the upskilling yourself, you can claim that
Okay.
amount from your income as a relief. That's incremental. And SOXO contribution, all the employees are required to contribute towards SOXO. We used to have 250 ringgit as a limit. Now it has further increased to 350 ringgit.
Okay.
It's not a big amount, but then any saving is a saving. Even if say for you, 10 ringgit, you still can buy, something with it. No harm.
Yes, you can
So
go to
any
mama shop and have a nice meal.
yeah, good nasi lemak.
Yes.
But sometimes what happens when you're small, they forget to claim. They just overlook. But then
Yeah.
it's just you lost the privileges of claiming it.
Yep.
So yeah, that's the thing. And furthermore, the SOXO contribution will be also stated in their EA form. They can pick up the numbers
Yes.
from there. And no documents need to submit. Except that is sufficient for you. To pick up the numbers from them.
Okay.
And yeah, recently during the COVID, the government also have introduced, those are traveling, those are going on a domestic tour,
Yep.
either they pay for the tour packages, to the registered tour agents, or they themselves, take up accommodation, hotels and whatnot, even pay for the entrance fees. They can claim those expenditure up to 1,000. But that was given up to year 2021 earlier.
Yep.
And the recent budget that was further extended to 2022. So
All right.
on the annual basis, so they also can claim for this year as well as next year.
Okay.
So you can imagine if you have spent 1,000 on those expenses, if your tax bracket are 20%, so
Mm-hmm.
you pay less 200 tax now. So actual expenditure on the tour now only 800 ringgit. It's sort of like discounted, by
Yep.
by you now paying less taxes at of 200 ringgit because your tax bracket is
Mm.
20%. So anyway, how much savings depend on their tax bracket, when they claim the reliefs.
Yep.
Okay.
Okay. Okay.
So the last part is the last one in the personal relief is this is completely new relief for 2022 and 23, at the moment,
Okay.
for the cost related to installation, rental of or purchase of the equipment for this what you call electric vehicle, EV.
Okay. Okay.
that
Electrical.
they, yeah,
Yes.
so if they install at home, for domestic use, not for the business use,
Okay.
if you install the same thing at your business premises, that is not claimable.
Okay.
So
Okay.
this all come under the personal relief. So they do can claim this expenditure up to 2,500.
All
And
right.
at the moment, the relief is given for 2022 and 2023.
All right. Okay.
Okay,
Okay.
so these are the among the major, I would rather say most important relief. It's more like an extension of relief, except just now EV is the new relief given, and other than that, of course, there's no tax change in the tax rates. No,
Yep. I think.
last
I
year
think.
there was some minor changes, but this year no. Yes.
Yeah. That was a lot of different aspects of it as well. I think many different reliefs and all of that. For those of you who are watching, I think when you're listening to this, it may feel like, wow, there's a lot of things going on, but I can't keep track. I think at the end of the day, you can always refer back to this video, but also just knowing that these things exist. When you go through your year, you're a bit more aware. Like for me, when I learned that your medical examination can be claimed as a relief, I actually started like, okay, being more aware of it, like make sure I keep my receipts safe, so that I can actually claim this relief and all of that. It just helps you to be a bit more aware when you're going through your day-to-day life. And when you keep your documents properly, I think you can claim many of these reliefs, and you will be filing taxes in a more appropriate manner, I would say. So I think that was personal tax, right, Mr. Krishnan? What is the next one we can go through?
Yeah. Just before to the corporate tax, as you say just now, the word document.
Yes.
I always tell my people document, 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 and document it.
Yes.
So anything not been documented, then you cannot furnish, and that will cost you. Not you could have claimed a tax saving of 200. Now you may end up paying 300. 250 additional with the penalties and so on if you can't furnish the document. So
Yeah.
I would strongly suggest if you can scan and upload and keep it in your even the soft copies, that'd be great. And should tax audit comes along, then you can always easily furnish to them.
Okay.
It's not the issue of claiming, but also keeping the documents. Okay, moving forward to the corporate tax front. So as I think more, one of the things the government has introduced called Cukai Makmur, you know, which is a new thing, first time. But again, that is only for year 2022 as of
Yep.
what has been announced. So currently, the current tax rate is into two type of, we can say for the corporate. One is for the SMEs, small and medium-sized enterprises, you know,
Mm-hmm.
where their paid up capital is 2.5 million below, or their turnover is 50 million below. So they will be
Okay.
categorized as SMEs, and they are given a preferential tax rate whereby the first 600,000 at 17%.
Yes.
Anything above 600% is 600,000 is 24%. You know,
Yep.
for the other than the SME, we call non-SME, it's a flat rate at 24. So they don't enjoy the preferential tax rate of 17% for the first 600,000. You know, this is mainly to give SMEs, some tax saving. But now the government is introduced a new tax called Cukai Makmur for the non-SMEs
Mm-hmm.
who are having a chargeable income of more than 100 million. So currently, if they're assuming the chargeable income 100 million, they will be paying at 24 million as a taxes because the flat rate 24%. As a non-SME,
Yeah.
and if they're having a 200 million chargeable income, they could have paid 24 plus 24, 48 million in the past. You know, but with the
Yep.
Chukai Makmur, the first 100 million or 100 million and below is 24%, which is 24 million, looking at earlier example. And the next 100 million, as we are looking at it earlier, the example is 200 million. So now they're paying 33%, which is 33 million. So
Okay.
there'll be incremental tax of another 9 million now because of 9%. So the
Yes.
total tax they'll be paying now is 24 plus 33, which is 57. That's for the year 2022, not 21,
Okay.
at the moment. So obviously that will bring additional revenue to the government, and it's more like corporate high income earners, those groups will be subject to this. Definitely, I
Okay.
mean, SMEs won't be affected by this change of tax rates, you know.
Yeah, I think
Uh,
there's also we also have some questions from the earlier part, but maybe we can finish our corporate and then we can take some questions from audience.
sure.
Yeah.
But other part of the good news is that that earlier we that losses, 2 years back the government has capped the losses you can carry forward. In year
Yeah.
2018, a new legislation introduced for the year of assessment 2019 onwards that you can only carry forward the losses, past losses, for 7 years,
Mm.
and now it is extended to 10 years now. Uh,
Okay.
so only after 10 years, you still didn't utilize the year zero losses, then that will go, that will burn, so it'll be like a window will be keep moving, you know,
Yep.
for the losses. And for the tax revisions, because of the uncertainties and so on, under the current practice of us, you can do the revisions, for the tax installments, six
Yeah.
month and 9 month. This was introduced from the year 2000 when we moved from the official assessment to self-assessment,
Mm.
and from the preceding basis to current year basis, where this tax installment, rather upfront tax collection kicks in. So
Okay.
they can do the revision in the 6 month, 9 month because the numbers may change, and they
Yes.
do the revision to avoid the penalty of underestimate. And
Yep.
so with in the current budget, they have also extended one more revision to 11th month,
Okay.
up to the 31st of October 2022. So those corporations think they want to revise it, they can revise their installment up to the 11th month. But whether the 11th month revision will be taken as the last installment, or rather the revised tax estimate for the penalty calculations, we are still awaiting for further guidance on it,
Yep.
at this
I
junction.
think for any accountant who has to go through the hassle of trying to maintain their tax being not
Yes.
underpaid or overpaid, I think this would be a very helpful tool.
Yes, yes. It's just that we have to now communicate with the client to ensure that they are aware, and they do the needful,
Yes.
And on the tax installment part of it, during the COVID, of course, 2021, they have allowed a deferment for the company
Yeah.
from paying particularly for the SMEs, the tax installment. from April to December 2021. Now they also can defer this tax installment up to another 6 months, up to 30th June 2022. So thereafter, they can continue the normal installment and they pay the final taxes when they submit their taxes, actual taxes, and there won't be any penalty and so on arises from
All
that.
right.
So this is mainly to help them with their cash flows, due to
Yes.
the various uncertainties. Apart from those, one more incentive was given. This is more like an incentive for the social enterprises,
Yep.
giving importance to the social enterprises or the growth of social enterprises, which is fairly new to our country. In some developed country, that could be only a advanced stage. To encourage them to be on their footing and so on, government now giving a tax exemption 3 years. But that again on the application basis. They have to apply from January 2022 by December 2023. So within 2 years they must apply for
Yes.
the exemption,
Okay.
and they must qualify as a social enterprise first. And as we know, it's governed by the Ministry of Entrepreneurial Development. So.
Yeah.
They have to apply, and they already been recognized or rather been awarded a social enterprise status, and thereafter they can take it further with the Ministry of Finance and apply for this tax holiday of 3 years.
Okay.
And that's on an application basis, not on the automatically given.
Okay.
So this is mainly the changes in the corporate tax. Of course, there are also additional changes happen in the various incentives and so on. I'm not going into it. It becomes too technical at this junction. We are looking at on surface, impacting general public. I mean, like talk about social enterprises. Maybe some of the young, the young generation youth themselves involved one way or another. So this could be good for them, to embark into the social enterprises and see how far they can capitalize on this tax saving, to enhance further their cash flow and investment into the social enterprise activities.
Yeah. I think if you're all right, Mr. Krishnan, we can actually take some of the questions. I think that they would like to clarify certain things. So I think we had earlier a person asking about, just to reconfirm, personal tax relief for upskilling, the RM 2000 is including in the RM 7000. I think a follow-up question from the same person is there a criteria or requirement?
Yeah, it's within because earlier 7,000 is mainly given to those who are acquiring, diploma or degree from universities or colleges. So this need not to be that. By then, for the upskilling, for those pursuing this upskilling courses or rather into the program, those program must be approved by the DG of the skill development. So I believe those training provider would mention, if those courses or which could be seminars or trainings and so on, qualified or approved by the DG of skill development. And limit to 2,000. Yeah.
All right. So it has to be approved by the DG. All right.
Yes.
I think we have another question. Is the tax relief for SSPN continuing next year? I think this is the SSPN, if I'm not mistaken, is the Child Education Savings Plan, if I'm not mistaken, right?
So if there's no changes, I believe it's continue. Otherwise could have stated so.
Yes. So okay. So those are some of the questions on the personal tax. If you guys have any questions, feel free to drop it in the chat. If we can answer in our current capacity, we would. So do feel free to drop it in the comments. I think we have covered two major areas. I think personal tax is a lot more on relief. Corporate tax is more on like the tax installment plans, rates changes, and few things like that. What is the other? I think the next thing that we're going to talk about is probably one of the most biggest and most important things, Mr. Krishnan. So you can take it away.
Yeah, I would rather say it's the talk of the town, because there's a change in the scope of tax itself, but this is not something new for us. It does exist up to the year of assessment 2023, and it's already in all the major countries, developed countries, by then in year of assessment 2024 onwards, the government thought of take a position should encourage the inflow of funds, remittances or money into the country. So they introduced this exemption, So if you look at Section 3 of the Income Tax Act, what it says is you know, a tax to be known as income tax shall be charged, you know, for each year of assessment upon the income of any person accruing in or derived from Malaysia or
Okay.
received in Malaysia from outside Malaysia. So section
Okay.
that is talking about accruing in, derived in Malaysia, or received in Malaysia. So that is actually the taxing section. The scope, that's where the scope is covered. Accrued in, derived, or received in. So that legislation, that piece of legislation, remain all the way. But in 2003 budget, they proposed to introduce the exemption under the para 26 of Schedule 7 from the whereby from the year 2000 and assessment 2004 onwards, all those income earned from outside the country, we call foreign source, is tax exempt when you bring in the income. So it was taxable earlier, then we got a
Exemption.
exemption. So you given as an exemption that any income you derive or earn outside, which we call it a foreign source, when you bring in the income, it's not taxed.
Yeah.
You don't even need to disclose also. So that makes almost our double tax agreement a bit redundant, because normally you go to a double tax agreement for getting a relief for when the same income being taxed at two places.
Yeah.
The country where the source arises and the country where the money is received in, where Malaysia. So since the taxpayer is going to suffer at two locations, then you go for the remedy through relief in the double tax agreement. If there's a double tax agreement, either you go for unilateral if there's no double tax agreement, or bilateral if there's agreement, under the section 132 or 133 of the ITA. And but with the exemption and so on, people don't even bother about the DTA, and some may not even know that it exists. Who cares,
Yeah.
government sign or don't sign? you know.
Yep.
But of course, all those agreements are remain and effective. Of course, in a certain industries, it was still applicable, because when this exemption was introduced, it was not applicable to those companies providing services like shipping companies, and transport,
Yep.
insurance and transport, sea or air. So they are not exempted from the income from foreign source. So they still getting the relief under the various agreements, double tax agreements. But now
Yep.
with the removal of this para 26 of the Schedule 7 of the Income Tax Act, now everything in the Section 3 become applicable, meaning to say even received in Malaysia. So if somebody having a rental income in Singapore, and he bring in the rental income now into the Malaysian bank account, or transmit the money, even personally carry back the money, it will be taxable now in Malaysia, even though
Okay.
the source is arising in Singapore.
Okay.
Safe to say there's many those on Johor are traveling every day to Singapore, earning the employment income. So the employment income are arising in Singapore because they're accessing an employment in Singapore, which we say source is Singapore. But
Yeah.
now, because if they bring in the money here, it'll be taxable in Malaysia, and since they're going to be taxed at two locations, then they can go for relief available under the double tax agreement. Probably government's intention could be there are also income people enjoying the exemption by not having we call double no taxation.
Mm.
The double no taxation arises when the source country don't tax the income. When the source country don't tax the income for various reasons, and Malaysia having this territorial basis score whereby remitted is not taxable, so they enjoy a double no taxation.
Yep.
Now with this, there won't be double no taxation. They'll be at the time with double taxation now, and if you want to get a relief, then we have to look at a double tax agreement, what is provided there, and so that you can mitigate overall tax paid in Malaysia as well as the in the foreign country.
Yep. So I think
Uh,
to kind of like summarize it is that previously we have this exemption where if you were earning in a foreign country and you did bring it back, you were not taxed here in Malaysia. You had an exemption for it. And now, if you're remitting that income back to Malaysia, you will be taxed for it, and hence why you would need to be a bit more aware about the double tax agreements in with the respective countries.
Particularly if you want to go for relief.
Yes,
You're willing to pay in both country as a good citizen. I mean, a good
you
a
want to
good
pay for
person.
both? Go ahead and carry on.
Let it be. Both
Okay,
both
okay,
government will love you.
love you. They maintain
Uh,
you in both countries.
but by then again, it's only income, not capital. As I said just
Okay,
now, when you bring in the rental, it's taxable here. But let's say you sell off the particular property, you bring in the proceeds of the sale of the property. That
okay,
is not taxable here. You know.
yes,
Uh,
all right,
uh, Again, now in the budget, they talk about receipt in Malaysia.
okay,
But there can be, we are still waiting for the further guidance. There can be situation money not received, but deemed received situations whereby I may have some liability to be paid here. Let's say I borrow some money from my Singaporean friend. When he was
mm,
here, I need some money. Then he gave me Sing dollars. I use it.
yeah,
Thereafter, then he was back to Singapore.
pay you.
Then I got rental income in Singapore. Then I took that rental income in Singapore and paid him.
Yep,
But now the issue is, does that mean I received here? Because actually the money which I paid him in Singapore been spent here.
yes,
So so now it's become is it deemed received or not? But anyway, at the moment there's no deeming provision. It's only
okay,
received. So we will are waiting for the further guidance from the IRB on the how it's going to be interpreted. Just only as what the dictionary meaning of receipt or beyond that.
okay. I think we have another maximum of 10 more minutes. So maybe we can just quickly run through a few more key points that we would need to take note of.
Oh
Suresh.
yes, I think the other one is more of straightforward. I can just go through.
Yes.
On the tax administration point, part of it, the government going to introduce a TIN number. They call it tax identification number to all the taxpayers as well as those who are 18 age of 18 above. Uh, so possibly having a TIN number, any major transactions, I believe you may need to produce this number, for various reasons. And this also for the reason to bring in a lot of, the shadow economy into the mainstream,
Mm.
and
Okay.
collect the taxes from those sectors. And
Yes.
the government also plan to introduce a tax compliance certificate as a part of the enhancing the administration, particularly for those companies participating in the government tenders, to
Okay.
ensure that they also a good they have a good corporate governance when it comes to tax returns and submissions. Because
Okay.
they are benefiting directly from the government, so they should also conduct their tax accordingly.
Yes. Okay.
And the renovation expenses, they just touch on the renovation expenses. It's only for the company, not only for the company, but also for anyone carry on the businesses in the business premises. During the
Okay.
COVID, the government has given what you call relief, or rather allowing an expenditure of 300,000 of the renovation expenses, which is not eligible under the Section 33 earlier. But
Yes.
now they can claim
Yes.
this expenditure, and in the recent budget, that also extended to 2022. uh, Earlier was from March 2020 to 2021. Now it's extended to 2022. But the total amount cannot exceed 300,000. It's not 300 per year, but in total 300,000. This
Okay.
is mainly for them to enjoy the deduction and refurbish their premises and so on.
Okay.
During these difficult times.
Yep.
And as I mentioned about the real property gains tax, when you asked me the tax legislation, one good news is for those individuals, Malaysian citizens or the permanent residents of Malaysia, if they dispose the property more than after or rather 6 years onwards, or after fifth year, no more property gains tax, which used to be 5% minimum. But that is going to take effect from 1st January 2022. So if you want to hold on to the disposal, you can still hold on. You dispose it after the 1st January to save the 5% taxes. That's
All
on
right.
the CKH, which is a good news in the property sectors. Apart from that, for the marketable securities and shares where the contract notes are issued, this is more on the stamp duty. Earlier, we used to have a 0.1% of the value, the contract and value, as the basis to charging a stamp duty. meaning to say for 1,000 you pay 1 ringgit, but in the past it was kept to 200 maximum. So even your 0.1% is more than 200 per the contract note, but they still kept it at 200. But now it was lifted, and lifted, no more cap of 200. Also at the same time, the rate also been increased from 0.1 to 0.15 now, which is actually 50% relatively looking at it, and so now it's a 0.15 and there's no cap. Meaning if you are disposing a shares worth 1 million, now you'll be paying 1,500, which in earlier scenario could be only 200. This is in a way to say impact the capital market, share trading and so on. Particularly those are big players are dealing with millions in value, and if their margin or profit is very low, definitely this will have an impact on their trading pattern.
Yep, I think all of this will have those impact on those who are investing. It could be in property. So the property ones, I think it's you get your relief on the RPGT, yes, but
Yes.
also on if your shares, then there's the impact of the stamp duty and all of that as well. We do have a question here. If you don't mind, we can address this.
Yes, please. Yes, I've done.
So there's a question here on under tax-free employment. What's the employee obligation to IRB Malaysia? The employment is overseas.
Okay.
I'm not very clear on this.
Okay, fine. I'm okay with it.
Yep.
So when it comes to the employment income, the issue is where the employment is exercised, because we have to go to a derivation, and a derivation on employment talk about where it is exercised. So if the employment is exercised in another country, so that country will be the source where those countries will be taxing the income, not Malaysia. So like as I said just now, if the person employed in the factory in Singapore is actually going there and work, so it actually derived from Singapore, and the source in Singapore. So the Singapore government will tax, definitely. But whether Malaysia government will tax or not is depend. As I say now, with the removal of the exemption, Malaysia also will tax, but that's on a remittance basis and not on the derivation basis.
Okay. I think it's not based on what you actually earn; it's about how much you bring back. That's what you mean.
I know with the current change in legislation, but the country will be right to tax is the country where the source arises.
Yes.
Which I say where it derived. So in this case, the person are actually sometimes you may be employed by a Malaysian company, but you're actually working in Singapore.
Yeah.
Then the Singapore may have a right to tax the income because you are exercising, not where you're employed, where you're exercising. So there's a fine line between the where is employed and the employed and exercised.
I think this is where I have a lot of respect for people who are in the tax line, because it gets so confusing and you have so many different areas where it comes into play. So I have a huge amount of respect for anyone who can navigate the tax world. Any other last key points that we need to take note of, Mr. Krishna, as we end our session today?
Meaning from me, is it?
Yeah.
Sorry?
In terms of the budget or anything else we need that you have to share, or if not, we can wrap up.
Overall, of course, the budget have covered the various aspects of the industries and the people, which they can have given more benefits, to the taxpayers, particularly during the difficult time. By then, the government themselves in a difficult situation, so they have to collect money.
Yes. Yes.
So, but only thing, the area like this foreign tax to be taxed here. Oh yeah, one thing I missed out just now, since you said. What will happen with this income going to be taxed from January onwards as a concession for soft landing? What the legislation says is between the January to June, they will be taxed only on the 3%. The tax rate is 3% of the whatever money you're bringing in.
Okay.
So after June, 1st July onwards will be based on your tax rate, whether it's an individual or corporate.
This is for the foreign income, right?
Yes, foreign income.
Okay.
And again, this tax only applicable to Malaysian tax resident. If you're not
Yes.
a Malaysian tax resident, you are not going to be taxed. For example, you can be a Malaysian by citizen, but you are not a tax resident.
Mm.
So if you are bringing the income from foreign to Malaysia, then you're not taxed on the foreign income. So now the planning of the tax residency also very important in light of the introduction of, or rather removal of this exemption. Earlier, the residential is important because of reliefs and scale rate of taxes, but now also covered the foreign income which you're going to bring in will be exempted if you are non-resident for tax purposes, because the non-resident, the residency of the tax got nothing to do with the citizenship of the person. It's more on the Section 7 talking about presence in the country and whatnot. So they have to do a little bit
Okay.
of tax planning in that area. Yeah, that's
Okay.
what I would say, and to wrap up my session.
Yep. Thank you so much, Mr. Krishnan. I think for the entrepreneurs here, the working adults, I think a lot of the things that were shared, it is applicable to you now already. So you can actually think about like the decisions you were planning to schedule, some of your investments, or even your taxation and all of that. Keeping an eye on the reliefs. I'm sure this session was informational for you to take benefit of it. For the youngsters who are watching, you may be wondering, why am I listening to this, and like, how do I put this into play? I think many times as youngsters we don't really uh, take charge of a financial literacy, knowing how money works, knowing how we are taxed. This is all very important, and if you can learn this now and get familiarized, so if you don't understand a certain thing, go and read up on it and familiarize with it. In fact, if you want me to talk about your money matters, you can actually get in touch with me and we can dive deeper into some of these topics. But the more you learn now, it will really benefit you as you transition into your adulthood and start earning for yourself and all of that. So thank you so much, Mr. Krishnan, for
You're
taking your
welcome.
Sunday
Welcome.
afternoon.
Thank you for the opportunity given. Thank you. Yes.
It was a very
Hi to
nice
all.
session. Guys, if you enjoyed today's session, please do drop a comment thanking Mr. Krishnan and sharing your experience of today's session with us. So, Mr. Krishnan, I'll be removing you from screen.
Yeah,
Thank you so
sure.
much.
Yeah, yeah, yeah.
All right. So, yes, that was episode 33 of Money Matters. We are coming very close to our 1 year anniversary of Money Matters. We're not there yet. It's happening next month. But there is another big milestone that is taking place personally in my life that I would like to share with all of you. I think I'm if you have been watching the previous Money Matters episode, I actually shared this with all of you. On the 9th of December, which is coming Thursday, I will actually be launching my first book called Money Matters. And yeah, so this book is going to share a little bit about my journey in terms of building my career as well as financial management, how some of the youngsters that I work with, how they learn how to manage their finances. All of this, I've kind of like compiled these experiences into a one book, and we are having the soft launch for this book coming Thursday, and I would like to invite all of you to join us for this session. I think it will mean a lot to me that if you guys can tune in for the uh, for the book launch and like find out why we I mean what is in the book, what is taking place and all of that. But more than that, it will also be great if you guys can pre-order your copy right now. Money Matters, the book, we are actually giving 20% off until Thursday night, 9th of December night. And so you can actually get it at a discounted rate if you pre-book your order, right? I mean, pre-book your book right now, pre-book your book, pre-order your book right now. All right, so this is the book. I'm super, super excited. I'm finally holding it in my hand. It feels great, and I've put in whatever lessons I personally have learned, the mistakes I have made as a young adult in finance. I've compiled all of it. So if you feel like you have some nieces and nephews who should be taking seriously in terms of should be taking their financial literacy a bit more seriously. If you are a parent who would like your kid to start learning a little bit about money while they're still in school, this would be a very friendly guide because it is something that has been made simple in terms that even I like enjoy reading. I personally don't like reading a lot of thick books with a lot of financial terms. I like to keep it a bit simple. So I've written it in more of a story like flow. So please do support me. It would mean a lot if you guys can purchase your own copy. And also, if you're someone who would like to get it for your friends and family, take advantage of the 20% off that we are giving right now. You can just have to go to the link that I've dropped in the comment, bit.ly/buy money matters. And please do use the coupon code MKBDAY 25, because on the 9th of December is my birthday. So I'm basically giving this promotion as a celebratory gift for my birthday as well. So I hope to see all of you in the book launch, and I also hope to see you guys next week on Money Matters for a very, very exciting episode. We will be featuring someone exciting. If you don't yet follow me on my social media, please do so that you get all the updates. And of course, as I mentioned earlier, subscribe to Money Matters so that you do not miss any of these episodes. Thank you so much, guys, and I will see you next week. Thank you so much for watching, and please do like and subscribe so that you never miss an episode. Do share this episode with your friends and family. And if you like this episode, leave us a review on our Facebook page, facebook.com/simplyempowering. Money Matters is where we aim to provide valuable content to inspire and empower you on your money matters. Thank you once again for watching this episode, and see you guys at the next one.